Hello, ladies and gentlemen. My name is Adi Muntazami. I just going to go through a simple strategies using Elliott Wave into training. I know I promised you guys to just put this video up in English sooner. I apologize for the delay, but I hope we can go through some principle of the Elliott Wave here today and talk about how we can use Elliott Wave principle into the trading. First of all, before I'm going to start anything, I just want to tell you about what Elliott Wave's telling. It is very simple in principle. Elliott Wave saying that every movement of the price in the market is either motive wave or correction wave. So what are these two? Motive wave is the trend-based wave, either up or down. So it is making a trend and going up, or making a trend going down. But what's the correction? The correction is actually any move against the trend. So there is nothing against that. There is nothing else rather than either motive or correction. But we go deeper. What Elliott's telling us is every motive wave, it consisted of 5 movements, which we call it 1, 2, 3, 4, 5. And every correction movement, it consisted of at least 3 movements, which is ABC. The point is, we might see more than one correction after each motive wave. Normally, we see one ABC right after the motive wave finished, but there is a possibility we see more than one ABC at the end of our motive wave. There are several different types of the waves, but I shared few simple ones for you. This is how the waves are going to look like in the movement of the Elliott wave. So we have 2 impulse, which they are simple impulse, 1, 2, 3, 4, 5. And we have diagonal, which we see these 2 in the motive wave. So any area you see diagonal or impulse, they are motive waves. And we have 3 major types of the correction waves, which they are zigzag, triangle, and flat. So there are more complex patterns. And don't forget what I'm sharing here, they are all specifically designed for the bullish move. It means when the trend's going up, you might see a flat like this as a correction, or you might see a zigzag like this as a correction, or you might see a triangle like this as a correction. But in the bearish movement, all of these impulse, diagonal, zigzag, triangle, and flat, they're going to be the other way, absolutely the other way. And we can discuss that in the video when we go to just check some more coins together. And we are going to see how they are working and how we can find them on the chart. Yes, guys, as discussed about the different patterns which might possibly has been seen in the motive part or in the correction part. We are going to just take a look at some of the coins and see what we can find and how can we actually find out how we can use these patterns and these movements in our calculation and in our day-to-day trading. So this is the ETH USDT chart. This is the most recent one, and you can see today is 29th of 6, 2021. And we are going to go through that and find out how we can implement the Elliott waves on the chart like this. As discussed before, just to ensure you guys understand what I do, there is a tools in TradingView right here, which is the Elliott impulse wave 1, 2, 3, 4, 5. This is what I'm going to use to draw my impulse wave. So the bullish impulse waves, as we said, it's consistent of the 5 waves, 3 motive and 2 corrections. Let's say this is a wave 1, then we're going to have wave 2, then we're going to have another wave 3, then we're going to have wave 4, another correction, and then we're going to have wave 5, something like this, okay? This is how Elliott wave movement in the price is going to be look like. And after that, obviously, we are searching to see at least 1, maybe 2, or in some rare occasion, 3 corrections, which they are going to correct the movement. So the corrections, which they are ABC, we use the same tools from the TradingView tools. This is here, Elliott wave correction waves, ABC, which I have it here. So after that, we expect this, a correction against the trend of the chart. 1, A to B, and this is the C, something like this, all right? So the whole point is these movements are going to have some principles. Before we're going to go and just check how we can find them, we have to ensure that we understand the principle of the Elliott waves on the chart. So the motive wave rules are few, but they are very powerful. And if any of those movements breach these guidelines, these rules, it means whatever we considered as a Elliott wave, it's not right, and we have to go and actually recount the waves. The first rule is wave 1 must be an impulse or leading diagonal. If you remember the patterns I showed you, it's talking about the wave 1, which we have it here. This is a bullish one. I make a 1 bearish one for you here as well, if you want to see. It doesn't matter, it's a bullish one or the bearish one. Wave 1 always supposed to be an impulse or a leading diagonal. Wave 2, maybe corrective pattern, can be anyone except the triangle. So when we discussed about the wave 2, we said in the wave 2 here and here, it is very uncommon and it is against the rule to see the triangle. If you saw the wave 2 looks like a triangle, you should go and recount. So it means it can't, but you got it wrong. Either this is a wave 4 or it's a correction. There are few very important rules here, and it's about having the overlap. One of them is the bottom of here, where the wave 4 finish, never supposed to actually go into the area of the wave 1. So if I draw some lines, you're going to see here, this is the bottom of wave 4, and this is the top of wave 1. So what does that telling us? Telling us if you see the price moves like this, that's not Elliott wave. So you got it definitely wrong. And on the other hand, on the bearish move, we got the same scenario as well. So this is the 2, for example. If the price in the wave 4 goes up here and goes beyond the bottom of the wave 1, this is not the Elliott wave. The next rule in the Elliott wave rules is the wave 3 must be an impulse. So this wave here from there to there, and here from here to here, must be an impulse. It can't even be a leading diagonal or ending diagonal. It must be an impulse. Wave 4 can be any pattern, so we don't have any specific pattern, but normally it's the opposite pattern of the wave 2. If you see zigzag on wave 2, it's more commonly you see wave 4 as a flat top. And finally, the wave 5, which is this one, can be either impulse or ending diagonal. So again, wave 5 can be impulse or ending diagonal. Wave 1 must be an impulse or leading diagonal. Wave 3 only can be an impulse. And in regards to wave 2 can be any pattern of the correction except the triangle. And one of the most important rules, which is the last rule, is the wave 3 never can be the shortest wave. So this wave, when we're talking, cannot be the shortest wave. If you calculated the length of that wave and it was shorter than wave 1 and wave 5, then definitely you got it wrong. So it can't be an Elliott wave. So let's show you how we calculate that. We normally can use the ruler. We just see how price moving. If this is the Ethereum price, you see on the top we got 4,113 and the price coming down. You see the wave 1 where I just draw it, it coming down by 956, and here we go. Wave 3 is 1,600, and wave 5 is actually 1,200. So if this wave became shorter than this one, which is 900, and it became something like this, even though it has all the rules, it's not the right Elliott wave, because here you can see the wave 3 became the shortest wave in the chart. So these are the principles. So I just touch base on it very quickly. I hope you guys write your notes. If not, there is so many resources out there in the internet. You can Google it about the motive wave rules, and definitely you can get all of them right down somewhere. So let me remove all the drawings and get back to see how we can do our wave count. The easiest way, obviously, is to find the impulse. Impulse, it's most obvious wave. You can see it from here somewhere up to the top, how quickly it goes up, how fast it's going up. Look at the candle. 1, 2, 3, 4, 5, 6, 7, 8, 9 daily candle, green after green. So this is what we call impulse. This is big, long green or big, long red candles, which we call them as an impulse. All right. When we find the impulse, so most likely a very long impulse can be the wave 3, but we have to go a little bit backward to see where the whole story started. All right. Right here, if I make it a little bit smaller, you can see how the price movement. All right. And you can see the price gone up, then down, then up, then down, and then somewhere like here, our movement up started with a very good momentum. So we assume this is the point which we're going to consider it as a start of our bullish wave. But we discussed it. We said before start of our new wave, most likely it was a correction, and before that it was another wave. So we go slightly backward. You see it here. It looks like we had another bull run here, which I don't want to go through it, but I just want to show you. So one bull run happened here from there to there, and then we had a correction. We had an ABC correction, and then here we go, another bull run. So if we come here, let me just remove this part. We had 1A, B, and here we go, C. And then after this correction, we can see the bull run. So what's happening here? So let's go through the chart, and after that, see how we're going to do the wave count. How I'm going to do the wave count is I'm just looking for leading diagonal or impulse as a wave A, which I can clearly see it here. From here to here, I have my wave 1. Then I have my wave 2, which is, you see the price coming down, the correction has happened, going here. Then we have our wave 3 going right up to the top of that candle. Let me just make it bigger so probably you can see it better. Then the price coming down here as a wave 4. And here we go. Finally, this is the wave 5 on the top. So after a correction, a very good, beautiful bull run. You can see the wave 3 is not the smallest one. I think it's much bigger than wave 1 and much bigger than wave 5. You can see the correction here in a pattern of the zigzag, as you can see it here. And there is another correction, very small one has happened over there on the wave 4, which shows how much demand was for the Ethereum at the time and pushed the price higher. So this is how we do the wave count on the Elliott wave movements as a principle to see how the price moving. Now we need to go towards more details and calculations about how are these numbers are going to work together, and are we going to see right numbers? Are we calculating it right, and how we can predict the price? Now we are going to talk about the guidelines, okay? And in the guidelines, it means this is only a guideline. It might breach. Still, you might have your Elliott wave. But these are most common scenarios you will facing when you use Elliott waves. In the motive wave guidelines, we have wave 2 is usually a zigzag based on the pattern. All right. Let's take a look. Here it's our wave 2. And if I remove all of our drawings, we're going to see it here, zigzag. So let me use this one from here. Here we go. So the price from here, get down to here, get up to there, and get down to here. This is the most typical way of seeing a zigzag. So this is a very good example of the correction when we had our wave 1 coming up, wave 2 became a zigzag, and wave 3 started right after that to here. The next guideline saying about wave 2 usually take a small amount of time compared to wave 1, and which is pretty fair enough. We can put some lines and see this was happening here. The wave 1 has started here, and wave 1 finished here. But wave 2 started there and finished here. So you can see the amount of time between 25th of March until 16th of April is the time it takes that the Ethereum complete the wave 1, but from 16th of April to 23rd of April, it's the time it takes to finish its wave 2. So it's almost 1/3 of the time. So this is what can help you guys to realize, are you really in a wave 2 or you're not? The most likely retracement for wave 2 is 50% or 61.8%. The two numbers which we are going to work here, which they are most common, are 38.1, 50, and 61.8. These three numbers, remember them. You need these ones: 38.2, 61.8, and 50%. So what are we saying here is, if this is our wave 1, which is, I'm gonna use the ruler here, the wave 1 price started here on 1535 and gone up to 2547, almost $1,010 rise on the price of Ethereum in the wave 1. And how much the price declined in the wave 2? The price came down from here to here, 560. So 560 versus 110, it is super close to half. So as we discussed, I'm going to type it down here for you guys so you can remember it. It is very important. So wave 2 equal to 50% or 61.8% of wave 1. So this is one of the targets which we can choose. Don't forget that it is always hard to consider or recognize a bullish run or a bearish run or any Elliott wave on the wave 1. It is almost impossible because after the ABC, which I showed you, you don't know if this is the second correction ABC or it's the start of the new wave. Yes, you might guess, but if you guess that the price is going to go higher after you saw the finish of the ABC and you saw this candle, so ensure when you open your position here, your close supposed to be right under the bottom here. So this way, if you are wrong and this comes out to be a correction rather than the move up, it's going to be happen like this: A, B, C, and here we go. Your stop going to work right here, so you are not going to lose so much money. All right, let's move on. So this was about the wave 2 size and how does that work. The next part is, it's unlikely that wave 3 be shorter than wave 1. You remember we discussed that wave 3 can't be the shortest one. Let me just draw this again. 1, 2, 3, 4, 5. Okay. What we discussed was wave 3 cannot be the shortest. Okay. But if it's going to be shorter than one of the waves, that wave would be wave 5 rather than wave 1. So if you saw that wave 3 is shorter than wave 1 and it's longer than wave 5, maybe you have to reconsider your wave counting. Maybe you made a mistake. Maybe you hasn't considered something in the middle. It's not something never happened. It's not a rule, but it's within the guideline. Next one which we want to talk was, it's coming about the wave 4, which we're going to say wave 4 is rarely a zigzag. And even though you can see it here, let me just close this. If we go to the subwave, you're going to see that wave 4 here, rather than being a zigzag up and down, it is sitting within the category of a flat top. You see what has happened here? The wave 4 here was very small. It is unlikely to be as small as this and as short as this, I'm telling you guys. In the Ethereum case, because of the huge amount of demand, the wave 4 became very short. But even so, in this one, you can see it's became a zigzag and it's became a flat top. So it's not usual to see a zigzag on a wave 4. Wave 4 length is most likely, the most likely number for the wave 4 is 38.2% of wave 3. Okay, here is much shorter, but obviously we can go and just find others. So let's go see BTC USDT. So hopefully it's not. All right, I want to show you BTC USDT here. And I want to talk about the wave 4 and the length of it and just do some prediction on the BTC too. So in the BTC wave, obviously, you see the start of the waves of the bearish movement are going to start from here, going down 1, 2, 3. And if we assume the last top is the top of the wave 4, it's gone up there and it's going to go lower somewhere. All right, so let's just make it smaller, so not making anyone confused about the price and prediction of the price. All right, so as we discussed, you can see here again, it's not a zigzag on the wave 4. If I use the same tool, you can see something like this. 30K. Yeah, that's a flat top. So far, at least, wave 4 looks like to be a flat top. So what's going to be next? We said that wave 4 is the most common number for wave 4 is to be 38.2% of the wave 3. So let's calculate that. Let's see how is that playing out. Let's use this ruler and go calculate it from there to there. It's 29,400 if I don't make a mistake. So I can make it even more accurate if I remove the drawings and let's calculate the price. It's right here to right there, and 29,650. All right, so $29,650. Let's see how much is 38.2% of it. 11,320. So remember that number, 11,320. So wave 4 started from here to here. So let's see how far the Bitcoin's price gone up from here to here. How much you can see, guys, here? 11,314. So you can see the rise we saw the other days, which pushed the Bitcoin price to around $41,300, was absolutely nailed the target of Elliott. So 38.2 from the bottom of the wave 3. So this is how we predicted that this can be the top. But don't forget that 38.2 is only one target, which is the most common target for the movement of the wave 4. That can be increased to 50%. And if it's become a 50%, we might see a little bit higher later when this movement going higher. So still is sit within the Elliott wave. rules and regulation. However, I think it's a little bit uncommon to change the pattern now. All right, let's move on. Let's move on to the next guidelines. In the next guidelines, we have wave 4. Another guideline was wave 2 and wave 4s are always alternate to each other's. As you can see here, wave 2 was a zigzag, and wave 4 was a flat top, as I showed you, something like this so far, flat top, something like this. So when we have something like this, we know when wave 2 is a zigzag, we most often we expect to see the flat top or something else, some other pattern. So we don't expect to see a zigzag again. All right, let's move forward to the next guideline. And this is about wave 5. The wave 5, what do we expect from wave 5? Normally, one of the expectations from wave 5, as we said, it's either ending diagonal or impulse. But the actual shape of wave 5 is not as impulsive as wave 3. It means the angle and the shape of it is slightly different. So you see here in the wave 3 how big the drop is happened and how fast and how big are the candles. We're most likely not going to see something like this in a wave 5. We might see a little bit bounce around in here. Let's talk about the size of the wave 5. Let's get back to the Ethereum. So probably get back to here. As you remember, we discussed and we called from here at the bottom to that top to be a wave 5, okay? The most common numbers for the wave 5s are, most of the time, they are either 61.8% of wave 1, 100% of wave 1, or 161.8% of the wave 1. So let's just write it down here again for you guys to remember. So we call wave 5 equal to 61.8% or 100% or 161.8% of wave 1. All right, so these are the most probable scenarios for the wave 5. So let's take a look at it. We have calculated the price rise in the wave 1. I think we did it here to, where was it, to somewhere like here. We said around $1,020. And let's see how much the price moved on the wave 5 here. From here to here, which is the top of it, 1,019, absolutely 100%, spot on. It means you couldn't get any prediction better than this when you are going to get into the trade. So how you want to get into the trade? You get into here, you see the wave 4 has been happened, the price dropped down. As soon as you see the price going to go up, what you do, you put your targets based on the wave 1. You say in the wave 1, we go up for $1,020. So I'm going to put my first target, 61.8%. When it gets close to the 61.8%, you bring your stop closer and let it go. Put the next target, which is 100%. And here we go. Go and hit the target. That's it. And you are going to make a lot of profit here. Just assume you bought Ethereum here at 3,376 and sold it at 4,359. $1,000 profit within 1, 2, 3, 4, 5 days. and this is such a profitable business for you guys. Let's go a little bit more forward to the motive waves and how they are working. How we can make this money work. There are different strategies, different people telling you how to start, how to get into the market. But I tell you some of the most safest one. As I said, I'm not going to gamble. I'm not going to get into the market when I found out some place might be the wave one. So most likely, when I see something like this, which I call it ABC move, ABC, most likely when I see something like this, the ABC happen, I see the wave one is almost done. I'm not still sure it's the correction wave or it's going to be the actually it's going to be something like a second correction or the next bullish move. So what I do, I will let this wave to be completed. I will let this wave to be completed. So I see the motive going up, then I will wait until I see the price going down to complete the wave two, which as we calculated, it was 50%, exactly 50%. And then what I do, as soon as the price hits somewhere here, which I call it 61.8%, and past that point, you see, if I don't wait until this pass, I enter to the market. Let me just put something like this. Yeah. Okay. I'm gonna say from here, how much is this? It's something like $600. Okay. So 61.8% of $600, it's going to be something like 400. Okay. So the price is around 1950. We add 400 to it. It's going to make it something like 2,350. Okay. I'll wait for the price to get to 2,350. Let me just make it much bigger. So I hope you guys understand what I'm talking about. So when I get somewhere close to here, which is 61.8% from this bottom to here, comparing to this move down, I enter somewhere like here. And I put my stop somewhere right below here. So if you enter here, what's going to happen? You might see a drop. But this drop, still there is a fair bit of safety from the point which you put your stop loss to the point which the price goes down. Yes, it takes 1 day, 2 days. You might get freaked out. Oh, I entered this. I might lose my money. But you're not going to lose money until you see it's hitting your stop loss because you're still on your trend. It's just telling you the wave two is still not fully completed and developed. But as soon as you get to this candle, you see the motive has started. I started here 1, 2, 3 days in a loss. Day 4, I was in a loss too. But after 4 days, they start rising up. So you see 5, 6, 7, 8, 9, 10 consequences day of a very, very good profit. And when I did that, where I put my target, where should I put my target? So the first target I normally put, which is the safest one, I put the target as a first length of the wave one. We calculated several times and it was $1,020. So what I do, I go from here, I calculate it from here, I go 1,020 bucks, somewhere like this, and I put my first target here. Okay, there is 2 strategies here you can do. You either can go and sell 50% of all you have in your second target here and make considerable amount of money. You see how much money you made. You entered somewhere like 2,350 and you're selling it around 3,000. Okay, but this even better strategy is, which I always think, when I get to that, I bring my stop loss, I put it above here, right above here, because I'm very confident that in the Elliott wave, the wave 4 is never going to come and hit this if I get my Elliott wave right. So this is a very safe stop for me. I'm still going to gain a little bit of profit here, but I'm not losing the bigger profit. And I let it go. And I set my second goal as something like 1.61% of the wave 1, which was around 1,000. It's going to make it around 1.6,000. So I'm going to go up from here and put 1.6,000 to see how far it's going to take me. Yeah, here we go. And look at this. Look at how good you can make money here. If you put your target here, it's going to come here into these shadows. It's going to hit my target, and I'm going to make a considerable amount of money here. So I hope the way I described the movement of the Elliott and how normally you can strategize your getting into the market in the Elliott Wave strategy help you guys to have a better understanding of what you have to do, how you calculate the length of the wave. But don't forget that what I told you, it's very, very basic Elliott Waves strategies. I'm going to make the next video about the more advanced strategies, how we make money in the corrections, how we make more money in the impulses. So we're going to discuss more about the details and more calculation and using more advanced tools, obviously. But this is for the beginners who never heard about the Elliott or heard about the Elliott, but they don't know what the hell Elliott is. So I hope this gives you a bit of idea about how the Elliott works. And don't forget that the important thing is we check everything in a daily. You can find that Elliott waves in any time frame. Look, I haven't checked anything. I just randomly choose 1 hour, okay? Let's see what we're going to see in 1 hour chart of the Ethereum, okay? Let's see what we're going to see here. Remove drawings. All right, one of the things coming to my mind. Let's get the bullish movement. All right, let's get this one coming to my mind. Here we go. Let's open it up slightly. Sorry. Let's go bring this here. First things come to my mind. All right, here we go. 1, 2, 3, 4, 5. And if I make it a slightly bigger for you guys, these are the 1 hour candles. And you're probably going to see the ABC correction right after that. A, B, C. What can you find better than this? You know, just take a look at a chart and you just pick up the easiest way to show you the trend. If you want to play it so conservative, just wait to get into the wave 1 finish, wait until wave 2 finish, and you can right enter after the wave 2 actually past the end of wave 1. You can safely enter here and still get a huge profit from there to there in a time frame of 1 hour. You can even go even to the shorter time frame. Or if you're investing, I don't know, it's a very, very long investment, you can go to the, go to the monthly chart. Even in a monthly chart, you might be able to see some interesting prices. Sorry, let me just remove everything. And don't forget that what you might see as a full Elliott wave in the chart of the, I don't know, in the chart of the daily might be fully a correction in the weekly or monthly chart. So depends on your time frame, the definition and how it works, it's totally different and it changes over and over. So you can see here, if we want to consider this as a move, this might be a wave too, might be, we are not sure yet because I can't see more than that, or even this might be a wave too. You can see, let me just make it bigger. On such a big numbers, when we are talking about the parabolic movement like the Ethereum, even Bitcoin, it's better to use the logarithmic movement because that's give you a better indication of how price moving, and probably this way you can see it even better. So it gives you much better indication of where are you. And here we go. So if we put it on a logarithmic, then you can see the movement like this. 1, 2, 3 on the top, and 4, 5. So let me just make it a little bit smaller. So give us some room. Yeah, definitely 3 guns there. So let's make a guess. As a last practice, let's make a guess how far the Ethereum price was coming down. So on the video so far, we discussed and we said most probable number for retracement of the wave 4 is 38.2. So let's calculate 38.2 to see how far Ethereum might come down. So let's see how far the price gone up. So it is $4,071. It's the price of the Ethereum going up. So let's calculate 4,071 multiplied by 38.2%. It's going to come down for almost 1555. That's the first target of coming down. So first target, it's going to be 1555. So if we're going to come down from here for 1555, we already passed that part. You see, we already passed the first target. The second target is half. So with the half, it was 4,000. Half of it is going to be 2,000, 4,000 something. So it's going to be 2,000. We passed that point too. What was the third target? The third target was 61.8. And you see, you're coming down by 2,700. So we almost see the bottom of the movement for Ethereum. But is that going to be the end of it? It is logarithmic movement. So we might need to transfer it to the auto to see if we are getting it right or wrong. So here we go. From here, we get it there, coming down to here, 4,072. And from here, to here, we already lost 2,700. So 68% of 4,000, hold on, 4,072 multiplied by 6.8. And it's giving us 2,500. So we already reached the point which we wanted. So that might be the deep. I mean, when we talk about deep, I'm talking about 1,600, 1,700. That might be the deep for the Ethereum. But don't forget that still that deep might go lower because of the huge wave 3 we have here. Unless the price coming lower than 494, I call it 500, still we have a valid we still have a very valid target for Ethereum. And don't forget that no matter how far this is coming down, it can't break to the 500 because it's against the Elliott Waves moves. But you know, even though this is coming down, this is in the wave 4. This is the correction part of a bigger picture. And after that, the price is going to go up in the wave 5. But this is on the monthly chart. So what we see in a monthly chart as a wave 4 is actually got 5 waves inside inside itself. So it can be a 5 wave of a bearish move, bring it down to whatever price it might. So you need to practice this in a different time frames, and you need to ensure that you learn the principle, you apply the percentage of the waves length, and you need to understand how you're going to use it. At the end of the day, I want to appreciate for your time. Thank you for listening to this video. I hope this be helpful for you guys. I'm keen to hear your feedbacks. If you have any feedbacks in regards to make the next video even better, please don't hesitate to subscribe to our channel, Sardine Crypto. So we would love to just have more subscribers into our channel. We are not making any money. It is just my hobby. So if you guys have any question, you are more than welcome to just contact me on the channel, Telegram channel, Aidinmon, Aidinmon, and I'm happy to help you guys if I can. Thank you so much. I hope you enjoyed the video, and this is it. Have a great day.